Well, to unpack the latest decision by the MPC, I'm joined in studio by Mandisa Zavala. She's the acting chief economist at Alexander Forbes, and also joined virtually by Mamello Matikinca-Ngwenya. She's the FNB Chief Economist. A very good afternoon to both of you. Thank you very much for joining us. I'll start with you, Mandisa, since you're right in front of me. Of course, the market had expected that the Reserve Bank would keep rates unchanged, so no surprises there. But when you look at the actual statement, some people were anticipating a hawkish statement. Would you say that that was the case?
Absolutely. I think there's also parallels between what, or the tone that Lesetja had, as well as the tone that central bankers like the US have. And I think it's very, very critical that central bankers and monetary policies or monetary policies seem to be stringent, because essentially one of the things that he touched on was inflation expectations. Essentially, inflation expectations still remaining high means that perhaps the market isn't buying the fact that they're going to be able to bring it back to target. So that is a concern that they have, and I think they're going to continue to manage that tone and keep it as hawkish as possible. It's what everyone is doing, actually. It's a global thing.
So, Mamello, Mandisa makes reference to the fact that, she made reference to the Fed. Do you think that had the Fed raised interest rates by any margin yesterday, that would have not only changed the tone of the statement, but also the action that would be decided upon?
So I think, there's quite a few things that the central bank obviously has to take into consideration. The financial conditions globally, which I think is one that the central governor essentially pointed to as a consideration. And I guess the trajectory of inflation. So he spoke a little bit about, yes, we've had two positive outcomes from an inflation point of view, but they do suspect that inflation will pick up over the next coming months. And then I think, just to circle back to your point around what other central banks are doing, I think, yes, if the Federal Reserve Bank had increased, it would have potentially changed the tone of the statement. But we still held the view that, our central bank would have maintained rates on hold, but obviously stressed the upside risks to the outlook.
So, Mandisa, one of the colleagues at the press conference asked a really important question about the fact that we are in a positive interest rate environment now, and posing the question, can the South African economy actually handle any further interest rate increases, because it seems as though it's struggling right now? Yeah. Your thoughts?
Absolutely. And I think, there's a lot of layers that we can tackle that. You have, in any economy, you have a fiscal policy and monetary policy, and both of them are meant to work together in order to promote strong growth. I think you can argue that we do have a little bit of issues from a fiscal policy perspective. So in other words, perhaps where we've invested in the past has not meant that we're able to generate growth. So perhaps you can say from that perspective, growth is not going to come through. And so you have monetary policy that is supposed to perhaps be pulling this big cart called growth, but essentially they're concerned about inflation more than they are about growth, because inflation hits the man on the street, the low income workers. And so I think literally that it's a good question. I think it's some of the things that he towards the end of the statement alluded to, that there's these effects, which is the transmission mechanism that is going to come through, which will essentially be coming from some of the things that they've already done that perhaps South Africa has not seen. And that is of a concern. What does that look like? Does their growth estimate is still positive? So we're not negative in a recession. So it seems as though essentially they think that it's South Africa can manage it, but we're still in a low growth environment. So I guess some can argue that perhaps because we're below our neutral rate of growth that we can't handle it. But some people might say from an absolute perspective, we still are going to be fine.
Yeah. Mamello, we'll continue after a short break on the thread of the consumer and how this affects them, because I know you guys at FNB, you do a report on the consumer. But as I say, we need to go for a quick break. We'll see you thereafter.